right, let's get started this morning. Welcome, everybody. It's TheoTRADE Chat. It's Don Kaufman here. It's April 5th, 2024. Oh, it's a Friday. It's Jobs Friday, too. So obviously some volatility after the jobs number. You know, there's a couple things on the screen that actually are a little bit surprising this morning as we come close. We're 3 minutes to go to the open right now. The surprising aspect is not necessarily that we're bid. So the jobs number was extraordinarily hot. It was hot. It was damn hot. The bonds have actually gotten rocked a little bit. But the unusual aspect of this morning, it's not even so much like the S&Ps are up. And, you know, you can look at the contract size this morning. It's getting it done, 360,000 contracts. It's the fact that the volatility is not backing off. Unusual. There's price action to come. That's all it's saying. Like, I'm not going to tell you which way it's going to come, but there's price action to come. The dollar this morning also is exploding to the upside. It's a big move. It's a big move back after some sell side earlier this week, but we're approaching once again some very critical levels inside of there. I'll show you something also that's really wild, is that the dollar is up huge and gold is still positive. Like something's got to give, man. Something's got to give. You got bonds down, market up. You got gold up. You got dollar up. You got volatility up with the marketplace up. Dogs and cats living together. Taking a look at the financials and around the sectors today. The financials are up, but mildly so. Okay, just look, the S&Ps are up some 17 handles, but for today, we have a $55 expected move for today. So, you're looking at a $17 move. You're like, it's a move back. First of all, we're still nowhere near the lower edge of the expected move. Tried for the corner and missed. We're still nowhere near the lower edge of the expected move. We'll come to that after the cash open, but the sectors are interesting this morning as well. So the financials, a little bit of a bid. You cruise over to the energy sector, which has been wild lately. It's got a little bit of a bid in here. Nothing crazy. It's got a little bit of a bid. When you start looking at some of the monsters of tech, mild bid to Microsoft. There's really nothing going on in Apple, and Amazon is up by $2. Google is unchanged this morning. Meta was your player yesterday. I mean, it was huge, and it continues to actually be rather huge. So we're huge by huge. Meta has a bid back under it. Was getting squeezed yesterday. Tesla's actually down nominally, and NVIDIA, which got whacked back a little bit yesterday into the close. NVIDIA is going to open the day. I mean, I would almost call this like unchanged, like a $9 move in here. It's pretty nominal, $9-10 move. So Meta is the only stock that has anything big and definitive going on. You're going to come into the cash open. The advanced decline line will be decisively positive. The ticks will be decisively positive. But with volatility, and it's maybe starting to back off a little bit, volatility is going to be pretty critical today. So if you're trying to assign a directional bias right now, you better check that crap at the door, because you're going to get your head taken off. Let's come to the cash open. So as I was saying, wow, the AD line, I was just saying decisively positive. Okay, I like this business. I like being surprised. Surprise, it's a 50-50 in here. And the ticks, which you would assume would be raging strong out of this, tick is coming out just about right now, is negative. Wow, the tick doesn't even look right. It's negative. Okay, not what we had anticipated into this. Well, maybe that's why volatility sees something going on here. So can't stress enough. I mean, I looked at every product that matters only 5 minutes ago, and there was a bid under everything that I was looking at. You would have assumed strong ticks. You would have assumed a strong advanced decline line. Quite the opposite. Question I've got is, we're going to try to rotate once again into some of the tech stocks. Again, Meta in early trade has a bid under it. There's a lot of call buying going on in Meta. Let's push that aside for just a second, though, because the other big players in the room are, of course, going to be the bond market. So taking a look at the bond market, which sold off, obviously, after the jobs number, looks like it's about to see some sell side again. I can't stressed you enough. Some sell side in this bond market. And it's really dangerous for the S&Ps and the Nasdaq, and that's okay though. I mean, it's down a point right now though, and the marketplace is up. I can't really see though how, and again, I do want you to make sure you hear. I can't see how the bonds, if the bonds slip just mildly down, I can't see how the S&Ps and Nasdaq are going to rally on the day. That doesn't look like it's going to be in the cards. And this is a little bit of a bounce back, but how much of a bounce back? Let's actually quantify precisely where we are right now. Apparently my lines are not drawn into Friday. What in the, okay, how weird is that? My lines are not long enough? I do not have long enough lines? Okay, just give me a second. Oh, what a mess. The 7th, okay? How weird. 1, 2, 3, 4. This is the 5th day. Yeah, we're going to have to fix that. We're going to have to fix that. So you can actually go in here and edit the properties and just take this and just shove it forward to right there and hit OK. There we go. See, that wasn't so bad. All right, we're just making sure everything is going to be okay with my expected move lines over here. That one does not happen too often. That's what happens when you hand draw things. You know what it is? This was a 4-day week, so it probably looked right to me. It was all looking okay. Let's go right here, right to the 7th. Okay, it's all fixed. Anyway, onward and upward over here. So I want to start with, and make sure we have that on there. I need my lines. Okay, lines, man. I need lines. I want to start with this. We're trading right now at 64. The expected move up here is at 92. So it's here. That's actually a huge jump to get back to the lower edge of the expected move. Right now, from a probability perspective, I don't think that, I mean, it's plausible that you get up here because the expected move is a $55 move. But this is it's dangerous turf. It's dangerous turf because mild sell side activity, everybody has to hop on board and just pummel this thing. And again, I want to make something clear. I am not categorically bullish or bearish today. Like I'm sitting here, hands kind of folded a little bit, kind of watching some of the trade activity. You got to understand, after a day like yesterday, we reversed by basically 100 handles. Coming in without any preconceived notions is, I think, critically important. You get a heavy volatility day. You know that today is going to be pretty heavy volatility. It's definitely odd that the vol futures are, up, even the VIX. So if you take a look at VIX, VIX took off to the upside yesterday, and I want to show you something very important, okay? So VIX goes parabolic yesterday into the close. In no uncertain terms, even if the market was down today, the volatility is really high, right? So you're in a situation where it's not that volatility is flat, and it is flat this morning to slightly up, but the situation is such that you would have anticipated after yesterday that the volatility would have overshot. I hope that makes sense. So volatility often overshoots. So it overshoots. So anytime you have it, and again, yesterday, whatever, the S&Ps were down like 70 handles, which is not that big on a percentage basis, right? But anything like this, where it goes parabolic, okay, into the close, you expect like a knee-jerk reaction and the vol to crush this morning. No matter what the market's doing, you expect a little bit of a vol crush, and we're not getting that. It doesn't mean that we're not going to get it, but we're not getting it right now. So you have to kind of be on your game over here for some pretty wild and two-sided trade. And I'm dead serious. I don't care that we're up, 20 handles. It means nothing. You could be down 20 handles minutes from now. And you go, how do you know that? Well, because the bonds have already sold off a little bit here, right? And the bonds, maybe they rally back, neither here nor there. Okay, the bonds have already sold off, which lends itself to some sell side activity and plausible inside of the S&Ps. The volatility is not backing off. If the volatility doesn't back off, okay, there's still risk that's barreling down in this marketplace. That's the only read that you get this morning. The other aspect that really bothers the hell out of me this morning is, can't stress this one enough. So you have the dollar that's up big. Okay, it's a big reversal inside of the dollar. But the thing that really bothers me is that gold is up. Okay, look, you're in a marketplace where like something has got to give, people. Okay, I just, when do you see a big move up in dollar being good for gold, right? I hope people understand the relationship there. I don't want to start getting into relationships and inverse relationships. The relationship is clear, critically simple in terms of, dollar down, gold go up, right? Dollar go up, gold usually go down. All right, because why? Gold is priced in dollars. So, if you took like I think the weird way to think of this is if you had like $2,000 ounce gold, $2,000 an ounce gold, and the dollar got cut in half, does gold double? Well, ironically, probably, yeah. So, but we're in a situation right now that the dollar is higher, gold is higher, which implies there's to me, I think that it's inflationary, very, very inflationary. Yeah, are we good with that? Okay. So in a situation like this, and I've had some pretty good intraday trades this week. I am not right this second shopping for an intraday trade, but anything's possible. Like I'm not going to sit here and tell you like, oh, I'm looking for an intraday trade. The intraday trade would come if like I think the S&Ps could get smoked, and if they get smoked, then the trade comes. Then I'll take it. But right now, stuck between a rock and a hard place. Let it play a little bit this morning, because as I told you a moment ago, if you have a chip on your shoulder this morning, we have to rally back, or the sell-off is going to continue. Okay, you've already lost. All right, and I'm serious about that. You can't. It doesn't matter how badly you want a market to go a certain direction. You think about the jobs number. If you're thinking about the jobs number, and I just want to enunciate exactly what it was. Jobs came in. This is non-farm payrolls, the mother of all jobs number. Jobs came in at 303. The estimate, and there's a bunch of estimates, but the estimate was for like 214. Okay, that was the estimate. So swing and a miss. No, it's actually, they hit that one out of the park. So the jobs number comes in and it's red hot. It's just a red hot. Everything that you've seen pretty much in data, other than maybe ISM, has been like red hot data. Inflation is coming back. Inflation's coming back, and if inflation comes back, it's yeah. Okay. I don't know. Janet Yellen comes out and says 6 more weeks of winter. I have no idea. Okay. I realize Janet Yellen doesn't run the Fed anymore, but she's way more fun to talk about than Jerome Powell. It just is. Okay. Anyway, with that, so even though we've been open for 9-10 minutes, by the way, the irony is looks like we've been open since here. That's when the jobs number came out. There's not a great feel for any trade right now. Just understand that trade, as I see it on the screen right now. Look at the contract size coming into the S&Ps. It's fairly deep. Right now we're doing very close to 5,000 contracts a minute, which, that's not exactly like unpredictable kind of volume, but decent out there. The marketplace right now, it's as I said yesterday, it's getting sketchy. There's no question it's getting sketchy. But what you have to be concerned about today is, and again, let's talk about risk reward. Risk reward. Okay. This one is pretty simple for today. Okay. And again, I'm not here to tell you whether you're bullish or bearish yet. I mean, look, you can see where the S&Ps are. I don't care if they're up 20 or if they're down 20. That move is nominal today. Okay. Today and today only. Look, here's the thing that should really grab you. The expected move. Okay. And you get sick to your stomach about talking about expected move. There's an expected move. This top one is for the week. Okay. This bottom one, okay, is going to be the daily. The weekly expected move is basically $62. The daily expected move for today is $55. Yeah. How crazy is that? So this whole week, okay, that's talking about from right here. This whole week was expecting a $62 move, but volatility came up so much that by last night, the expected move is $55. Now you know why I look at the marketplace and I go, I don't really care what you think. It doesn't matter. We have a $55 expected move. Now, there's some good, there's some bad, there could be some ugly. this is where we presently are. Getting back to the lower edge, okay? That's lower edge of expected move. That would be, again, the 51.92. That's where that is. That's a 5, man. And that's supposed to be a 2. Oh, son of a, okay? You get back to the 51.92. The ironic twist, that it's absolutely plausible, but 51.92 happens to actually encompass about a $50 move to the upside from where we opened. So this would actually, suffice to say, be, important. As I said, though, don't worry about if the S&Ps are up, down 20, doesn't make a difference. So from where we right now, we're up 20. To get to the lower edge of the expected move, we need about another 20, 25 points, about 50 points, right? It'd be about a $50 move. And all we would do, though, is claw back to the lower edge of the expected move. Okay, that's one side of it. The other side of it is a deep, dark hole onto which there is no escape. If we go down from here with a $55 expected move, that would be like, this massive, like 70-point reversal. That would be awesome. But I don't know if we have it in us today. All right. Again, you can see that the bond market, in my opinion, that the bond market rallying here is actually bullish, okay, to some degree. However, even though I'm saying the bond market rallying a little bit is bullish, look, the volatility will not back off. Okay, I know everybody wanted to show up today to see some chaos in the marketplace. So a lot of times, though, you see some sell side activity, and the day after gets a little bit, sloptastic. And this is a little bit more sloppy. We're rallying. We haven't broken through, obviously, some of the highs from this morning, but we definitely have a bit under us. But anyway, you show up, to kind of see some volatility. It's in the making right now. We'll see how this kind of plays in the next few minutes. As I said, like, I'm still not sitting here thinking anything but, well, this bond market is obviously fairly pivotal. The volatility is pivotal. The dollar has actually got the bid back under it. It's up a full 50 cents. And I am still, I say, oh, we're rallying now, but I'm still yet to assign, like, unless you're moving like 40 or 50 points, I really don't care what you think, because it ain't going to make a difference. Speaking of not going to make a difference, not gonna work here anymore. The QQQ. Let's go look at the Qs. So the Qs. All right, where are they on the week? Very important to denote. The Nasdaq right now is on the lower edge of the expected move. So it is doing squat, but outperforming the S&Ps. The real reason, though, I'm bringing up the QQQ is to show you something, okay, quite spectacular. You have a $5.50 move expected on Qs. So for those of you that do not speak expected move geek, if you take the QQQ, which is $5.50, and you multiply it by 40, okay, because the Qs are 1/40th the NQ, that'll give you expected move. So today, the Nasdaqian people, they should expect a $220 move. That would be one standard deviation. So where are we right now? We're absolutely nowhere. Look, the Nasdaq is moving 100 points. So we're not even halfway home to what it would expect, right? So if you look at this like from a distribution point of view, take a look at this and you go, whoa, like that. Okay. That's the expected move, up 220 or down 220. We're like over here. And you understand now why I don't want to jump on trades this early. I don't have anything on my side. Okay. But Don, this is selling off. It doesn't make a difference. Okay. But what? Okay. You got Nvidia moving $12. It's 1.5%. We've all seen that before. Let's go look at some of the order flow in here. I'm just not sure, like the order flow in Nvidia, I don't think it's controlling anything right now. Okay. It's decent. There's some size trading in here. There's a couple calls being bought over calls being sold. The put's pretty even in there, yada, yada, yada. There's nothing to see here. Let's go look at Meta. Okay. It's my favorite stock to hate. Oh, now this is interesting. The call activity is not there in Meta. Dead heat, right? Puts, there's nobody trading anything. Okay, Meta ain't what you think it is. So that to me is a little bit more of a bearish connotation for an early trade. And then we have the Microsoft, which is up a decent amount. I'm not really looking at Amazon because that thing's a pile of crap, but there's nothing going on in there. And I say Amazon's a pile of crap. Amazon, okay, is most definitely seeing call buyers. They are rushing into this marketplace. Amazon is, okay, it's like the stock to watch today inside of the Nasdaq. It's a big move. It's a really big move. On a percentage basis, this is one that does not usually play a critical role. So that's all. That's all you got. Again, Meta is not, okay, in play right now, at least in the option side of things. Who cares? Up 1.5%. Clearly, Amazon. Everything is being fired towards Amazon right now. 28,000 contracts at the ask or above versus 13,000. So the marketplace is just being flooded with buy side calls, which is going to drive the stock a little higher. Now, as I've said time and again, that can dissipate. Like, the one thing you realize in a marketplace like this, we saw full blown correlated markets yesterday. Okay. Right now, and again, I'm so leery of like, assigning a direction today. And again, I don't care that we're up 24. As I said, we're not even halfway home to the expected move, which is 55, but I'm so leery of assigning anything direction. We're still at a 50-50 advanced decline line. And I find that interesting because, yesterday, everything was like, we're all up, we're all down. Okay. You could see a couple of market reversals throughout the course of the day. It does appear that we're trying to claw to, we just cracked into some highs over here, but again, it just doesn't feel right. Like, there's times where we crack into new highs and you're like, oh, let's jump on here. Let's jump on trend and ride this thing. Oh, hell no. That ain't going to be me today. Okay. You're going to jump on, get kicked off, get trampled a couple times. It's going to be awesome. Okay. I wouldn't jump on a damn thing at these levels. Okay. It just doesn't feel right, man. Doesn't feel right. By the way, the energy sector just went negative. Prognosis negative. It's tech. Got a little bit of financials involved, okay, but they're lagging on a percentage basis. It's tech. Order flow is still trying to prop up tech, okay? Go, prop it up. I don't know if it's got it in it. That's why I keep looking at this. Everything seems to be stalling out, right? Where, there was a rally and then it faded. And then it was, oh my gosh, we almost bought Amazon. Yeah, a lot of put selling in here for sure. Okay. All right. Well, we're going to take a look around at some individual trades and keep on going. So as I was saying a moment ago, you want to look at these S&Ps, okay, and you want to say, oh, it just hit the high of the day. Yeah, that's great. That doesn't mean a damn thing because volatility, it's pretty much at highs too. How does that make you feel? That's the thing that when people get myopic basically means they trade on an intraday chart and they just stare and they stare and they stare. I'm not telling you that we're not going to go up. I'm telling you that if you think we're going to go up, your setup is all wrong. You hop on trend and think that we're actually going to break out to the upside, which shouldn't volatility collapse, right? Come on, you're 20 minutes into a trading day and the volatility won't give it up. If the volatility ain't giving it up, that's because that marketplace continues to keep a bid under volatility. Why? Because it doesn't trust a damn thing that's going on in today's tape. Okay, trust no one. That is the only way to really read this. And if you look, even at fear of missing a rally, okay, and that's okay. There's times where you'll be like, you know what, this thing is going to rally, and I'm going to miss it. Okay, but that's great. I would rather miss the rally than buy when the volatility won't back off, and also when the bonds are actually down a little bit and the dollar is so strong. Okay, there's just like too many factors on here from a probability point of view. There's too many factors that would make me say, I'll let this one go. I'll let it go by me. Okay, I'm not really comfortable getting long on this day because there's too many factors again that do not sit well with me. The financials are relatively flat this morning. I see the XLF bid, which might imply that Berkshire Hathaway is up. All right, let's go look at Berkshire B. Okay, and the reason I would know that Berkshire is up is because Berkshire is actually, and ironically, the biggest constituent inside of the XLF and all this other crap behind it, which is the banks. The banks are actually falling right now. So there is sell side activity. And the reason I wanted to pull up Berkshire is I wanted to see if it's going to roll over. I assume Berkshire Hathaway is going to roll over, and it could start to create a little bit more pressure. Right now, all you have in the marketplace, all you have is Nasdaq, and believe me, that is enough to cause a rally. Nasdaq is the end all be all to be, to get a bid under this, but yeah, be careful. Okay, this is could be what we term bid to puke. So you get the bid back under you, and then everybody decides, no, I was just kidding. But volatility is starting to come off a little bit. Onward and upward. So we have a Boeing position. The Boeing position, I'm actually going to bring it up. It is right on the dance floor for a close. It's one of the few that I haven't closed. Nasdaq is at highs. Nasdaq cracking into highs. The Boeing position is in the money. And you go, well, why isn't it closing fully profitable? It's very close. It's very close to closing fully profitable. It's almost profitable, and it's almost making its 55%. Why is it not? Because volatility came up quite a bit yesterday. Overall market volatility goes up, and it kind of causes your in-out spreads, okay, to not hit full degrees of profitability as quickly. So we're in the money. We're doing okay. We're okay to go. We're okay to go. We're up about 40%, 40, 45%. And you can see right now, I have a working order at $1.81, and we're $1.70 mark. So I'm about 11 cents off of a fill. So if you do get any sell side activity to the marketplace today, or hold on, you gotta understand this, and this is why I'm bringing it up. If you get sell side activity to the market today, almost assuredly, Boeing would fill, Boeing, we would get out, we'd be profitable. But if the VIX crushed today, like if you got a dollar VIX crush, which is VIX from here all the way down to here, if you got a VIX crush today, that might also get us out of the Boeing trade profitably. And you go, what? Yeah, the volatility really came up a lot in Boeing in the last 24 hours. I mean, the volatility came up in the whole damn marketplace in the last 24 hours, but Boeing seemed to really feel this. Like there it is. Okay, it's like I've done this before. The volatility. This is 30-day volatility, but anyway, volatility came soaring in the last few days. It really took off to the upside yesterday. That is. This is actually implied volatility ranking, or what we term a volatility percentile. So it's moving in a big way. Anyway, Boeing, it's still right on the dance floor for a close. That is the last of the in-out spreads I have. This week, we closed a couple of in-out spreads profitably. So we had closed, what was it, the XLE? I'm just doing this off the top of my head. We had an XHB yesterday. By the way, this one was open, okay, and closed for 30% in one day. Just, I mean, look, we put it on, crap hit, and we're out. Okay. So I have never listened to White Snake. That is not fair. since 1992. Got the jacket somewhere, man. All right. You're killing me. You're killing me, Smalls. Okay. That Pantera. Now we're talking. All right. I lived in Los Angeles in the late 80s and right to the early 90s, about 7 years in LA. All the big bands were there at that time. All of them. They lived in the neighborhood too. It was so cool. Great stories of that stuff. Great stories. So, all right, S&Ps still got a little bit of a bid under there. Okay. All the hair bands live there. All of them. Bear with me for a second. All right, so the only thing we have left outside of the in-out spreads is the Boeing one. The reason I wanted to go to XHB, so here's one that we had opened and closed. And the reason I'm looking at it is kind of funny, but I'm like, if it goes up a little bit more, I might get back into the same trade. That would confuse the hell out of everybody. I like to do that. I resemble that remark. Anyway, so we opened it for like 88, 89 cents and then closed it for $1.16, $1.17. And again, it was the May 3rd. Let's take a quick glance out. And the reason I'm bringing this up is I want to see if everybody got in and got out. And survey says, no, they did not. Okay, you look at this crap. I sent the text message. There was plenty of time. Look at this. There's still some contract size trading in here. I know that there was almost 1,000 in the open interest. So only half the people got out profitably. It was an easy fill. I got out well before the cash close on that one. I say it's an easy fill. You can see me getting out. I got out. There's still 30 minutes to go. And the XHB, I just want to explain something. The XHB in the last 30 minutes, it dipped, okay, even below where my price, my fill price was. So right now, you're probably not making that 30%, but we'll hold on over there. Okay, we'll see. Okay, 70s, 80s, the best music ever. I don't know, man. Okay, I don't even know what's coming. Actually, I do know what's coming. I have kids, and what they listen to is absolute crap. Just crap. So did I say that loud enough? Yeah, it's crap. They listen to garbage. It's horrible. Okay. Algorithmic, just piles of crap. It's probably the same algorithms driving this freaking market higher right now. It's a conspiracy, I tell you. NVIDIA. Now that's a real bid. Meta too. I mean, it's again, you have a tech bid. It's basically it's NVIDIA, it's Meta, it's a little bit of Google, it's Amazon. There's nothing really else. I mean, like Microsoft, okay, but it's still as sketchy as can be. So volatility, I just want to show you, volatility threatened to come down 3 minutes ago, and the last 2 minutes came right back up. Okay, we are not sounding the all clear. I again, I don't mind mornings like this. I think that people get very frustrated. Okay. But as I said to you, like, well, I probably wouldn't be on the bullish side of it because it can come right back around in your face like that. I mean, again, the bonds rallying, I reiterate, the bonds rallying is definitely and categorically bullish for S&Ps, but that's the only thing that's, kind of moved. Yeah, the dollar threatened to back off. Ooh, hurt me. But then you've got gold, which is now in Never Never Land. I mean, it's backing off the last couple of moments, but I'm looking less at the chart and I'm looking more at just overall price action. Again, the warning to you is if we flip back over, it's going to be ugly. I do want to price something really quick. I mean, we're only like halfway home to the standard deviation. Okay, I want to take some risk. Okay, who doesn't want to take some risk? It's a 40 delta for $1. Damn, those are expensive. Okay, look at this, still a $3 move. There's still $30 of movement being priced in even after we've moved $30. It's just an interesting point to be made because I just looked at this and I'm like, wow, that's $1.06 for a 40 delta. That's like the most expensive options we've seen in quite some time, right? The at the money is, almost $1.50. Yesterday, I basically bought some at the monies for 60 cents. Did everybody see that one yesterday? So if you missed it, okay, you missed everything. So I bought at the monies for 64 cents yesterday and we whacked them at 572. Ooh, who got better than 572? Who? Who got better than 572? Okay, come on, people, fess up your fills. Fess up your fills. Confessions of a trader. Yeah, come on, something's gotta happen this morning. Don's getting angry. It's just a handful of tech stocks, and that's it. You're 4 stocks away from the deep dark abyss. Caterpillar. This one kind of pisses me off a little bit. Okay, not even gonna sugarcoat. Caterpillar didn't even back off much yesterday. Now, I would love to take a position in here, but the damn earnings are coming up, and those earnings are really they have implications. Okay. Did you really get 965? Was that even plausible? Hold on, when did I get out? No, now I'm kind of curious. How is 965 plausible? I mean, it's possible. I got out at 1132. No, you're right. Because at 1232, that was about the bottom of it. So son of a, yeah, I got out here when we hit the lower edge of the expected move. Holy crap, he held it. And that is possible. Okay. He held it right until like basically the close. As we've said time and again, I was happy with the lower edge of the expected move. So I'm going to throw this out here. So the advanced decline line has not budged this morning. The ticks are flipping back over, but come on, that's nominal. It doesn't mean anything. The financials, if you take a look down at the list of the usual suspects, the financials are starting to undermine this marketplace a little bit. Intel, for example, is down. Okay, there's enough market cap. Look at Intel, by the way. Oh, there's enough market cap leaning on us right now that the slightest inclination of like, I can't stress this enough, the slightest inclination of like Nvidia pulling back is going to crush these S&Ps. There's nothing else holding us up. I mean, what do you have that's bid outside of a couple of tech stocks? I mean, you look at stuff like Costco, $700 stock. It's not really bid. It's basically flat. Boeing is totally flat. Caterpillar, it has a bid. I'll give you that. Caterpillar definitely has a bid. There's nothing else on my screen though that matters. Like the financials, okay? The financials are craptastic. They're basically unchanged. The one that is holding it together is Berkshire Hathaway because all the other financials are negative now. Okay. And they're not just negative, they're seeing sell side activity. Look, I don't have to look at the chart. I can see on the screen. I see it. Okay. They're not selling hard, but they're definitely unchanged in the day. So they're not helping sustain this marketplace. Okay. This is the first time today, though, that we've seen this kind of activity. So the advanced decline line isn't really portraying much of anything right now. Meta, okay, still basically, relatively at highs. Amazon continues to get a bid back under it, and that's your marketplace. So we're seeing 4 tech stocks basically try to save the world. Let's see if order flow can continue to perpetuate this, because what we're seeing right now, specifically, look at this. Look at the call buying in here. There's 53,000 trading at the ask or above. It's only 30,000 trading at the bid or below. So what is sustaining the market right now is pump the calls in, but that can just evaporate in a second. All right. If it doesn't work, they'll just back away from it completely. And you back away from this, we stall out. Right. So here's a stall. They don't come back in here in the next couple of moments. This marketplace is going to see some slippage. So Microsoft came in just a little bit though. Microsoft though is not seeing any real heavy options activity. It's just pretty much a moot point, right? I need to see all the numbers. Okay. And then of course, Nvidia's got some call buying, but it's pretty mellow. Yeah. Sorry that this is a less than spectacular, I guess, trading session versus what we saw yesterday. But the bid back under the marketplace is flimsy at best. And okay. And by the way, this is not a trend yet. When you're halfway home to an edge of an expected move, well, Nasdaq now is more than halfway home to the edge of the expected move. Okay. It's funny because you had an interesting statistic there because what Corey said is right. Marx was saying trends rarely reverse on Friday. I would agree with that. But there's one caveat. When they do, it is a significant reversal. Okay, significant reversal. So if you look at it from a probability perspective, you can say 70% of the time, if you're trending higher, 70% of the time you'd stay on trend. Okay, but that other 30% of the time, if we do break trend, the reversal would be inordinately large. And I think that that's always a way to think about it, because when I'm trying to scalp on an intraday basis, okay, I don't try to grab a couple of points. When I try to trade on an intraday basis, I'm trying to knock that cover off the ball. And we've had some good trades this week. I don't have a great setup right now. Like I can take a shot in the spiders and just say like, look, it's pretty good probability we're still going to reverse today. I don't mind doing that. But what I don't like today, and I'm being honest with you, I just don't like it. I don't like paying $1.36 for an at the money option that has 6 hours left to live. To me, that's expensive. I'm going to tell you right now, it's expensive, but there's no question. There's a reason that this option is so expensive. It's because you're still sitting on 27 vol, which equates to a $30 expected move in the spiders, or SPX, I should say. SPX is this marketplace refuses to settle out. And no matter how much you want to look at this, and no matter how much you want to scream about get on trend and get bullish, it is not a bullish market right now without an equivocation. If that market, okay, collapses underneath us, which is doing right now, okay, you can't be surprised at all. You just can't be surprised. By the way, that option I was just looking at $1.41 is $2 now, like that. Okay. If there's one thing that you'll learn this morning is, okay, it's not about like, oh, trusting a marketplace that sold off. Don't give a damn about that. Okay. That's neither here nor there. Never trust a marketplace. That's not definitive. What is definitive is volatility. Volatility basically at highs of the session. That is odd. Okay. That is a very stark warning to you that if volatility is at highs of the session, the cash session, volatility is higher right now than it was before non-farm payrolls came out. Okay. That's a problem because that basically says we're totally destabilized, that nobody trusts nothing. Because if they did trust it, they would go in there and they would sell the living hell out of the option marketplace, even on an intraday level. Does that make sense? Because I'm trying to explain it in terms that people like, look, if you trusted that this marketplace was going to rally, they would crush the living hell out of that volatility. Why? Why do they crush volatility when they trust markets? They crush volatility because it's easy to sell option premium. You go, it's over, and they'll just sell the puts. And as soon as they start selling puts, it'll crush the volatility. It's supply and demand. Okay. Right now, there is no supply. There's only demand. People are on the buy side of options because they don't trust the S&Ps. Okay. If they were on the sell side, it would actually crush the volatility. We good? Because again, this is where, you know what? Throw your technicals out the window, chuck them out the window. You want market internals? I got your market internals right here. It's a 50-50. Okay, you want ticks? Ticks are going to be worthless right now. The only thing you got, ticks are negative, but hey, spectacular, whatever. Ticks are negative, of course. We just backed off for 2 minutes. The only thing that I'm going on is volatility is really high. The bonds have rallied back up, but they feel I'm feeling a little destabilized. Yeah, that's what you got. Let's go down to Bitcoin today. I've been relatively surprised some of the price action in here lately. Okay. What's funny is Bitcoin looks exactly, I don't think too many people are talking about this, but it looks exactly like NVIDIA. Looks exactly like NVIDIA. Okay, give me more GPU. So it looks exactly like it in terms of price action, where it basically got up there, stalled out. Okay, I mean, look, you say what you want, it's still almost a $70,000 product. I just don't feel warm and fuzzy about, buying something that, I want to hold it in my hands. You're like, well, you have a hard drive. Well, I want to hold it in my hands and I want it to be shiny. Yeah, it's a hard drive. You can make it a shiny hard drive. It doesn't really do it for me. Okay, it does not really do it for me because you can't really hack, gold. You can steal gold. Okay, but physically stealing gold seems more complicated than, in the metaverse stealing some crypto over there. But I know it's cold storage. If I have to hear one more person explain this to me, okay, I know. I've been in this business a while, so I'll tell you what. You can cold storage is from your cold dead hands, right? Ah, good stuff. Sorry, I'm just reading back in here. Confusing. What's confusing? There's nothing confusing. It's sloptastic out there. Just wait. It'll break. It'll break. It's gonna happen for you. It's gonna happen for you. I'd like to trade today, but I mean, it's you just don't want to step out into the middle of like a firefight like this. I think that's the better way to explain it. You step out in the middle of a firefight like this, and there's days I come in here and I want to trade. And I woke up this morning and I was like, oh, I want to trade. And then I look at this, and the second you actually pop your head out of your little foxhole here, it's going to get taken off. I can't help but to, if I did anything today, because we're up right now, I got to go contrarian. If we were down right now, I might take the other side and get bullish. I can't get bullish where we're presently at because there's too much volatility in it. Even if we go up from here, it doesn't matter. You don't have a great risk reward. I mean by that is you're already up 25. Let's say the expected move is $50. We're already halfway home. So even if I bought a call, like look at the price of a call versus going higher. It doesn't make any sense to do this because the price of an at the money call is basically $1.30. So even if we rallied and rallied $2 from here, your $1.30, we rally $2, it's worth one, two. It ain't worth it. The risk reward is terrible on the trade, right? So if I pay $1.36 and we go $1, $2, oh, my $1.36 is going to be worth what, like 230, like 270. So you're like, yeah, but you doubled your money. No, it's a stupid, stupid trade. You double your money. It's not doubling your money. You have no probability to be able to make money though in that instance. It's just, if you do this trade like 1,000 times, you're going to lose money after commissions and everything. And that's not a good trade. There's times where I do a contrarian trade just to be a contrarian. Absolutely not. It's better risk reward. Okay. And again, I'm still sitting here like, oh, look. Okay. Now we have a bid back under us again. How exciting. Somebody make up your mind. Oh, it's sloppy. By the way, to remind you, there's nothing going on today. Baker Hughes rig count, consumer credit, none of these. There's a little bit of Fed speak. Okay, what is the Fed going to say? Yada, yada, yada. Okay, we're feeling a little froggy today. Speaking of the Fed, this is May. Okay, remember 8 weeks ago now, 8 weeks ago, March was assured to be a rate cut. Well, now May, so March was absolutely no rate cut. Then we have May. May has a 95% chance of no cut. Check out June. June is the change today. June is basically a complete coin flip, right? It's 50-50. Okay. I know you're looking at this and you go, no, it's 42, 56. Yeah, it's basically a 50-50. It's been, oscillating. July is the first time that we really start to get into. By July, there's probably going to be some type of a rate cut. And, everybody looks at this, but again, I'm not even looking at that anymore. Honestly, I was looking at it constantly because the big shocker for me is that the market has reacted, in my opinion, the market's reacted very positively, okay, to being dead wrong about interest rates. So they're like, yeah, the economy is much stronger, okay, which means they're still going to have to stall the economy out. I also, every day I've been reiterating, if that is not inflationary, then I don't know what is. Okay. I mean, oil is your $86 a barrel. I mean, you can easily see this weekend, would you want to go home this weekend short oil? Oh, hell no. Okay. There's no one that wants to short this product right now. I think it could be a death wish. You could easily see $100 a barrel oil. There's a problem, though, inherently with that. If oil could spike over the weekend because of geopolitical risk, I ask myself, would I want to go home long markets this weekend? And I have problems saying yes to that as well. I can see that there's a bit of a rally underway. Now the Nasdaq is starting to creep up to what it was expected, another 50 points, and it's home to the edge of the daily expected move. At the exact same time that I'm saying that, I'm still not like enthusiastic about wanting to buy Nasdaq here, okay, or anything. That volatility remains too high to try to scalp options on an intraday basis. So this is one where I'm going to let it slip by. If the opportunity presents itself in the next hour or two or three, I can hop on an intraday trade. But until then, I'll let fly over here. By the way, I'm just looking at CAT coming in a little bit, and energy sector is basically flat. The financials now have gone flat. Just again, there's nothing between this marketplace and the abyss and basically 4 tech stocks. And those tech stocks being a little bit of Microsoft, most definitively Amazon. Google is kind of a player in here, Meta, and NVIDIA. I mean, 4, maybe 5 stocks, okay, that are kind of on the leading edge. I say Google's kind of a player. Come on, it's only up like 1%. It's on the leading edge, but not by anything but a hair. Apple is just nowhere to be found. Apple's still, rough around this 170 level. Speaking of that 170 level, I've traded a little bit in here. I have traded a bit in here. By the way, I'm just looking at the price. As volatility starts to subside, it's not subsiding much, but this trade is still relatively close. Okay, relatively close. Interesting. Bear with me for 1 second. I'm just looking at some inventory in here. Inventory looks good. Some trades, catapult inventory looks good. Other trades, okay. Everything looking good in here. We're okay to go. The VIX trade's doing a lot better. Got a lot of accounts in there though. All right, I'm sorry, I had to look through some inventory really quickly because there's definitely some things bothering me on the screen. Interesting. All right, onward and upward here. Close in Boeing. So we've broken a couple times to the upside. The Nasdaq is still just a hair off the highs. Sorry, the volatility is not collapsing. The interesting thing as well is, and this is something it's worth showing you guys. Look at the expected move for next week. Holy crap, it's up to almost $100. So we just came off a $62 week. The expected move, it's not quite, but it's almost double. It's almost double. The day is young. I still can't help but to think, and again, I am going to give you a little bit of an opinion over here. You're going to get some big scares right now to the downside. I think it could be actually right now too. So that is not a foregone conclusion. That is an opinion, but I'm at the point right now where this volatility has sustained itself for just far too long. There's got to be a reason. They may actually come and start to smash these S&Ps a little bit. Look, I don't know if this is going to go trend down today, but I'm going to tell you right now that I think we're going to get some scares to the downside. I mean, you may feel quite threatened in the next few minutes of trade, or at least in the next 10 to 15 minutes. So just be on your game. They got to crush that volatility, or markets are going to start to pull back. This is just, it's too expensive to maintain positions on the long side, meaning that you're looking at option premium. I mean, again, I think that the retail trader looks at option premium very differently, okay? But the market making side of the business and the proprietary trading side, look at this. You realize that that expected move, not only hasn't it gone down, the expected move has actually gone up a little bit. That expected move had dropped to $2.80. It actually is back up to $3. The way this works is people are still on the buy side of options. And you go, how do you know that? Because if they were on the sell side of options, the price would go down. Supply and demand. So if they're buying options, it's too damn expensive. Like, that's it. It's too expensive. Time is a wasting over here. This is an option that expires today. So you're basically on the clock right now. It just that does not sit well with me. You can't have this kind of gamma risk because it's 0-day expiration. You got huge gamma risk. They're on the buy side of options. Crap's got to move or the volatility's got to collapse. Okay. One of two things has to happen here. You better start moving or you better start collapsing volatility. And if we do move higher, the volatility would collapse. But I think we've given enough time right now. So just be on your game. If I'm not saying we're going to sell off, I'm saying I think you can get some fairly precipitous scares in here, and some big, fast, choppy trade is coming. I don't think we're going to meander too much longer with that kind of price action for the option side of the marketplace. You could see the volume starting to drop in the S&Ps as well. All of this is going on while VIX and vol futures remain rather flat. Okay. Oh yeah, no, the only thing I was going to say about Apple, I've been trying to tee up an Apple trade for quite some time. So I've got, let me see if I can go find this account. Bear with me. Bear with me. All right. Catapult. So I've got some, I got me some Catapult. This is actually another account I opened. I keep opening more accounts at Tasty because I am scared that I opened up another account here with like, took 100 grand out of thinkorswim and we put it into Tasty. Okay. I've actually done that twice now recently, but I'm not feeling like thinkorswim. I'm playing around on it every day, but I'm using its technology and not really trading as much. I mean, you look at all these positions and you're like, oh, but you are, but I'm not. Most of the portfolios now exist on Tasty. Anyway, I'm building these catapult portfolios. Here's actually a trade inside of Boeing, because if Boeing does break down, let's go look at Boeing again. A couple of different trades in Boeing. If Boeing breaks down, let's go look at a like a 5-year. I think this is a fairly critical level, right? So right in this neighborhood here is the critical level. If Boeing breaks down, it's I could retest, into the the low to mid 100s. So I'm gonna insist upon me putting a catapult in play. But there's another one that I actually really like too, and it's a similar situation. The similar situation is in Apple. If Apple breaks, okay, where it presently is, and you can see there's some big time support right here at this, 169, 170. If it breaks, it's a long road to the downside. I mean, I don't know where it's going, but that seems like a fairly long road to the downside. Apple is right towards the lower edge of the expected move, but moreover, it's only down 8%, and it feels heavy. Like Apple has not had a bid under it for weeks now. And when I say weeks, I'm just talking about these weeks. There's one day it had a bid under it when the rest of the marketplace flew. Everything else has been given back. It's in a little bit of dire straits. Meanwhile, you've got Amazon. They like me. Okay, I thought this thing was getting Temu'd to death. Okay, go Temu. That's good stuff. And here we have the S&Ps, which, as I said, they should, for all intents and purposes, get quite sketchy here. All right, well, we're going to sit tight. Not going to rush any positions in here. We've had, this is one of those weeks where I kind of want to go into the clubhouse happy on a Friday. Okay, if I'm going to put anything on today, if we rallied big today, I might be able to get a bearish in-out spread. Obviously, the XLE spread we took off, the XHB spread we took off, the Boeing spread is right on the dance floor. So I don't feel the need. I don't feel the need to necessarily have to jump on any more of those. Like jumping on a grenade over here, but I'll take the opportunity if it comes. But I would only probably get into positions if we rallied up. I've looked at stuff like Tesla, like, oh, you could do an out spread in here. You can't. The earnings are coming. Earnings are going to be very difficult. So in-out spreads are predominantly going to have to be stuff like XHB and ETFs and so forth. ETFs, index related is what I would look at. Okay. Yeah, photo guy, I might sell some premium in here. Okay, I'm gonna let this settle out for a portion of the day. No reason to go in here with the S&Ps up 27. Okay, as I said to you, it's not just an assumption. It's it's kind of a foregone conclusion to me that we're going to see some short-term volatility start to hit this tape. Okay, I'm surprised. As I said to you, 6 minutes ago, I literally said see some short-term volatility. This is not enough. Like we need to start moving here, because if we don't, they have to crush volatility. All right, you got market making firms, derivatives firms holding millions of dollars of positions that could have tens of thousands of dollars of theta. They're long in some of the positions, and tens of thousands of dollars of theta that they're burning. We don't start moving, there's problems. Okay, so they can't necessarily, and most of the market making firms are reactive. They're not proactive. But there's a lot of proprietary trading firms that are like, come on, man, make something happen. And if nothing happens, believe me, they don't go out there and buy more calls if nothing's happening. Okay. So you look at stuff like NVIDIA, okay, the dispersion trade, that might not be working anymore. And NVIDIA can start to come in. You look at stuff like Amazon, okay, and if it doesn't work anymore, all of a sudden, like all their fuel runs out. All you're doing right now is looking at a marketplace that's being fueled by call buying in four stocks. And as soon as the call buying dries up, okay, that's it. Boop, we'll get, whacked to the downside. Maybe we're seeing that right now. We're getting whacked to the downside. Look how much call buying has gone on. Like if you have any question about what's driving markets, you only need look at Amazon today. Everybody's guns are fired like right there. Everybody's pointed and firing basically at Amazon. It's 72,000 contracts at the ask or above. Okay. That stalls out for even a few minutes. This stock starts to pull back. There goes your Nasdaq. Nasdaq is holding us together. That's it. There is no financials. They're unchanged. There's no energy sector. It's unchanged. Caterpillar is a pile of crap that's, up, but it's not big enough to make a difference. I know everybody likes to point out, but there's this stock. All right. You want to see this stock? This stock's $187 billion. You know what $187 billion is? It's a freaking rounding error. That's right. It's a rounding error to NVIDIA. There's our volatility, as I said. Okay. I feel better now. Okay. I can breathe. There's the volatility that we have so been expecting. Ooh, Interesting. So S&Ps are pulling in a little bit here. Okay. Again, no great trading opportunity right now. Gold, though, is I appreciate Kirill was actually talking about gold in here. No, I appreciate that because my eye saw it a few minutes ago on the bid, but this is huge. I saw it like coming up right about here, but these are huge moves. Like again, you're looking at this marketplace. The dollar, it's come down a little bit, but like again, something has got to break in here. It's got to break. Gold up, dollar up, S&Ps up, volatility up, dogs and cats living together. Okay. There are some big moves right now. It's a couple of the retailers. Speaking of retailers, give you one last look at a few retailers. Then we're going to turn it over to Jeff Bierman. So the professor, Jeff Bierman, will be coming in here momentarily. Take a look at like Lulu, talk about lows and more lows. Okay, look at Nike. Okay, Nike, big lows yesterday. This is where things got really interesting. Take a look at like Home Depot, getting smashed. I mean, this week, okay. Ooh, I don't care who you are, that has got to hurt. So Home Depot getting smashed. I mean, it's retail, but it's also home improvement now. It's spreading, okay. And I hope financials are next. I mean, I assume that technology would be last to take the hit, but financials, come on, they got to be on the dance floor. That was a good size move yesterday. If you look at auto expected moves, they're basically on the lower edge of expected move. Okay, not exactly taking huge hits in here. In any regard, I'm going to turn it over to the professor. Jeff Bierman's going to come on here momentarily. Again, I am less than enthused with this first hour of trade, but this is okay. This is okay. I mean, again, got to watch a handful of tech stocks. Amazon, okay, had 3 bad minutes, and look what happened to the Nasdaq. Okay, that's it. When I say that, we're resting on a handful of stocks, you're not even resting on a handful of stocks. What you're really resting on is these proprietary trading firms rushing the marketplace with calls. And in my opinion, I think they're running out of juice right now. It's just not worth it. If the S&Ps don't move, how do you buy calls in here? Buying calls in here is not really driving markets. So the volatility isn't going down; it's going higher. It's the highs of volatility right now. Expect some movement again to the S&Ps. As I said to you, I can't sit here and preach to you that we're going to see some sell side activity. Okay, it's not my intentions at all. What I can do though is tell you that. Okay, I mean, I can tell you that we're not necessarily going to pull back, but you're going to see some short term, some fast moves. You're going to get some fear. Okay, I mean, you're going to get some fear. I'm surprised that we didn't even touch into like this 5,200 yet. Okay, that's 20 points lower. Okay, don't be surprised. Don't be surprised. Like volatility, this was going to be a high impact volatile day. As I said, I can't tell you that we're going to flip over and sell off. We could be up 55. We should be down 55. This is a pretty negligible move at this point. But don't sit back and kind of rest in the laurels. This is not a trend day to the upside right now. It's not. This is 4 stocks that seem to be running out of a little bit of gas. Okay, they can come back in there and they can try to prop these things up at any time, but that's a degree of risk that you're going to take in this marketplace. Stay tuned. I'm going to put on the professor. Jeff Bierman is coming on.